Om no kaha samastaha suki no bhavantu. May all beings be happy and peaceful. May all traders be prosperous. Phoenix here. Welcome to my channel. As promised, I made a very important and, in my humble opinion, exciting announcement on Twitter today. For those of you that don't follow me on Twitter, I'm going to go through it really quickly. Basically, I've opened up my C3 group, which has been private for members only until now. I paused all payments for members because of financial hardship and also because I want to grow the community and I want to be able to serve as many people as possible. And I also just love to see other traders profiting. And so I've cut down the cost of my course to $36. I've cut it 85%. I cut down the cost of my book. It's $8.88 on paperback and $1.99 on Kindle, which is the minimum that I can price it at. And you can join the C3 for free. The only catch is that you need to sign up using 𝐬𝐸𝐧, which actually is a really good deal, especially if you live in the United States. Any other country, you can trade up to 200x leverage, and they have some really great rewards systems built in. And if you sign up under my group, you can enter in a $100 giveaway. You also get up to 30% back in your fees. So it's really a good deal on every conceivable level. And I understand some of you might not trust this, and that's totally okay. You don't have to join in, but I want to at least mention it to you as an opportunity. And you can actually track my trades and see if I'm putting my money where my mouth is. So let's dive into the charts now, take a look. There's a lot of activity today, right? First, it was the altcoins pumping, and I definitely got stopped out on some trades. Adam and Matic really took me for a ride over the last couple of days. Some unexpected PA. Matic's up 22% right now. If you look at the S&P 500, we'll start there. As always, we've been in this range, and I said it possibly coming back up to test the top of the range, and it's been all over the place the last couple of days, but it did close in the green. Now, what's more significant to me is the Dixie. If we take a look at the dollar index, you can see that the range, it has been obeying the range, came back inside. It was showing some strength, but now today it's down over 2%, or about 2%, I should say, because of some jobs reports that were positive. But still, we have to take the macro context here. We have to consider the bigger picture. We are still in an uptrend, although it does seem to be slowing down. Would I call this the end of the bear market? Absolutely not. And as a matter of fact, this seems pretty reminiscent of the previous big run up that we saw, which was months ago now, when Bitcoin ran all the way to 48K. I don't know if you remember correctly. It tagged the 200 SMA and then got crushed down once, one big leg down, and then consolidated, and then another big leg down. Now, we haven't seen that yet. We're sitting at around 21,100, but I feel that we could run up here very quickly, and I'm going to show you why on the Bitcoin chart. Now, full disclosure, I did enter along here not too long ago, and that's why I'm rushing to get this video out here. Here you can see really interesting price action, right? Let's not look at the 15-minute. Let's look at the hour chart. We established a range here that was near the top of a longer term range, and it seemed to be wanting to break down. I had some shorts here, and then I closed my shorts because the price action was acting pretty funny, and especially with the alts pumping. Usually what happens in a bull market, we see the alts pump, Bitcoin remains flat, and then they start to dump, Bitcoin starts to dump. But here we saw the alts pump, and then Bitcoin and Ethereum started to pump. And Ethereum is up almost 7.5% today. Bitcoin is up over 4%. But this was tricky, right? Because it came up above here and showed some resistance initially on the hour and came back down again. This is going to fake out a lot of traders. Fortunately, I wasn't awake for this, or I might have taken the signal here. Came back down and then came back up. But now we're looking for signs of strength above this level here, and we're seeing it. It's not really breaking down as of right now. Now, it still could come all the way back down again, whipsaw. But if we, again, look at the macro context, crypto recently has been looking for excuses to pump. when you see any sort of a surge in the stock market or a drop in the Dixie, and today a 2% drop in the Dixie, that's the most we've seen in a long time. So all of this is confluence. It's giving us some more potential confirmation. Now, I know it seems like a stretch, especially when you consider that we just came all the way down from 20K over the last couple of days, and now we're at 21K. How much higher could it go? Well, if you zoom out and you look, there is an inefficiency here. This big candle here, this is a fair value gap, and it is the next supply zone. So a lot of people are paying attention to this resistance level, but you need to actually give the supply demand zones more weight in this context. And I would say that if we really break out here and we hold above 21K, in all likelihood, Bitcoin's going to run to 22 to 22.5, maybe even 22,700. This is the supply zone here between 22,200 and 22,800. Okay. And if Bitcoin does that, Ethereum will likely follow. But now I did not take a long on Ethereum, and I'm going to share my reasoning why. The ETH BTC has come up and it's shown a lot of strength over the last couple of weeks. But now it's at the 0.5 level of this range here, and it's showing some initial resistance. So it may continue to push up from here, maybe after a successful retest of this 0.5 level, but Ethereum has already made a pretty decent run today. And so I think that the upside, while it will likely continue north from here, upside is maybe a bit more limited. Now, looking at supply zone for Ethereum, this is it right here. Okay, so that would be 1784, the peak there, between 1715 and 1784. So that's where I'd be looking for some initial resistance, signs of weakness. Now, mind you, I don't just blindly short when the price hits one of these levels. That's not how it works. But this is where I'm paying closer attention for signs of a reversal. And this seems to be the most obvious place. Obviously, it's standing out here. To anyone who's paying attention, who knows the basics of supply and demand, this is standing out. And so we have another 6% or more up into this zone. With Bitcoin, let's see, what's the difference here? It's slightly higher. So in either case, I think Bitcoin and Ethereum, for me, those are where I'm placing my focus right now, mainly because if you look at the altcoins, I mean, Matic just went berserk. It went up 22%. And yes, this is a supply zone. I had an alert set here, it pierced right through it. Okay. But now would I fade this? No, not yet. Not yet, but definitely wanting some redemption here, wanting some revenge on this one. I'll admittedly, and that's also another good reason not to jump into a trade, because Matic definitely got me good this week, and it was more up here that it got me. I got out, fortunately, but still took a pretty decent hit there. Risked too much on that trade. So it is what it is. It's really helpful to have a trading journal and to take notes when you do suffer losses so that you don't make the same mistakes twice. And I'm actually using a new journal system. It's called 𝐬𝐨𝐬𝐧, and I'm actually learning how to set it up because I have to manually enter my trades. But it tracks the P&L over time, and I can see it on nice, pretty charts. And so I think it's definitely worth doing that. You can add notes as well. And they have I'll leave a link down in the description below if you want to sign up and get a discount on that. So Matic is really nice. Atom is really nice from a bullish perspective, right? But will it continue? I would not long this. Why wouldn't I long this? Because we've seen a really big move up already. And in the larger context, I shorted this looking for a head and shoulder somewhere up here, and it just ran away like immediately in the other direction. So I'm out of Matic for a little bit here. And you have to be able to laugh at yourself and just understand that sometimes that's just what happens. Sometimes it just starts pumping and running away and defying TA. And that's just how it goes. And then you get out of the trade and you brush yourself off, you get back up again. So that's what happened for me with Atom. I shorted somewhere over here and got completely stopped out up here. But hey, could be worse, right? Could always be worse. And you know, it's a beautiful day outside. The sun is shining and it's not too noisy. There's some sort of machinery running outside, but it's not too big of a distraction for me here. You can see that Atom is coming back up again. It's in an uptrend. So what are we looking for in an uptrend? If you wanted to continue to place longs, would you do it way up here where it's overextended? For me personally, not financial advice, I would not. I would wait for an EMA bounce. Maybe ideally it would come down to the 21 EMA, retest, and maybe show me a pin bar down there. And then I would consider a long, given that there's considerable strength in the rest of the market. But this is a later stage uptrend in a bear market. If it was a bull market, it would just be beginning. But we're in a bear market. So context and timing is everything here. So I'm not saying I wouldn't long Atom. I'm just saying that I would want to see it come back down again, maybe at least down to this level here and retest and see if we get a pullback. It looks like it wants to pull back, and then see what the relative strength is, and then consider taking a scalp. That's just me personally. Okay. So let's see what Solana is doing. Up 8.5% today. The Solana here could be interesting, especially if it comes back up to this level like a 10th time, because this is a resistance level, but there's a more obvious fair value gap here. Okay, so it could break through. I would definitely not be fading this if it did come back up to this level a 10th time. Okay, Litecoin, I don't know what's the deal with Litecoin, but Litecoin's going crazy. Usually when Litecoin pumps, that's a bad sign. Usually that means that the rally is nearing its end. Okay, but Litecoin, why would I not long this here? Because look where it is. Look at what's going on here, and look at what it just did. Big move up. Okay, big strong move up. Needs to at least pull back down here, maybe show some strength, but still, I just wouldn't touch this. It's too irrational. You know, it's just like a human being that's just acting, you know, like a child or maybe your spouse that's acting a little bit out of control. You just kind of like, I'm going to leave the room now. I'm going to come back when you've calmed down a bit and shown me some pattern that I can work with. Okay. ADA actually looks to be breaking out of this range here, but upside may be limited. Okay. Like I said, I don't like all this chop with these altcoins. It's just, I try and find the cleaner charts. XRP, I would not touch this. This is garbage. Okay. Traded it for a bit when it was clean, but it's not clean anymore. Okay. And AVAX, no. BNB, huge pump. Okay. BNB was another one that I had to get out of pretty quickly. It broke out of the range. Let's look and see. Let's break this down because, oh yeah, obviously, in retrospect, hindsight's 2020, look at the size of this 4-hour candle, but you want to see it happen on the lower time frame. So let's get rid of these, because when we're working within ranges, we're not using EMAs. It's when we're in a trending market that we want to look for EMAs. Okay, so now you see on the 1H, what happened? Moving up, back up into the top of this range, this candle was significant. Let's see if there was any volume behind it. There was some volume behind it. It was larger than previous candles. Okay, so larger volume, larger spread, came back, did retest another strong candle. This would have been an excellent entry here for BNB. Now, I was short here, and this is the problem with positioning yourself one way and then it goes the other way. So if I drop down to the 15-minute chart, in the 15-minute chart, this looked like, you can see the pin bar rejection here came down and then started to come down, but it was too early. I entered this trade too early here, and then it started to break out, and you could have seen that through here. So you can see this on the 1H, you can see this on the 15-minute, it was breaking out. So the more a resistance level is struck and the more momentum that you see behind the move leading into the strike at the range high, the more likely it's going to break out. And so it did just that. But at this point, I had to get out of a short. And usually what happens is it can be difficult sometimes to want to flip the other way when you take a scratch on a short that's going in the other way. Okay. So I don't know if that makes sense, but but I think you understand what I'm trying to say here. I'm trying to be as raw and just flowing with my videos so that I don't have to edit them, and because it helps me to just do a once over on Premiere Pro and add what I need to and then publish it. So sushi has been interesting too. Wow, sushi is totally breaking out again above, what is this line? What are we looking at? Yep, it's breaking out above this resistance level here. Sushi could have more room to run here. This is a very clean uptrend. But then we have 1, 2, 3, 4, 5. Okay, so I mean, depending on how you consider these waves, but it's definitely moving strong. I would not fade this here. And it's coming back down. It did come back and retest, showed some strength here, some potential. This has some potential as a long. We'll see how this plays out. I don't know if I'm going to though, because I've lost my confidence as far as trading alts for a couple of days. Usually if I try to, this is another reason why it's good to track your performance, because if you have, say, you can compare all your Bitcoin trades and say, okay, 8 out of the last 10 trades have been in profit versus Matic, I may be 50-50, then you know what you're going to do better with. And so that's really helpful to know. So lately it's been more closer to 50-50. I think I've been profitable overall with Matic, but with Bitcoin, Ethereum, it's a different story. So, and obviously there's going to be more volatility in times of volatility, which this is one of them, but this also means more trading opportunities. So it's a really good thing for traders and investors. This also starts to get investors back interested again. So it's kind of interesting the way the market makers really manipulate. They know how to manipulate the markets. They know how to move the price to get people interested just enough. It's like luring a fish, you know, it's like you put just the right amount of bait on the line to get the fish. And that's really what's happening right now, in my humble opinion. So do I think this is the end of the bear market? Absolutely not. Do I think that we saw the bottom at 17, whatever it was? No, I don't think so. I think that this could be that move that we saw previously, similar to what we saw here. It may run up. The next level of resistance is going to be around 22,800. It will definitely, I think there's a high probability that it will run up to there. And then from there, we'll have to see if it runs up higher. But when you're in a bear market, let's turn these off, and I'm going to turn on the 50 EMA. Okay. When you're in a bear market, there's something called the daily bias strategy. And when you look, the further you get away from the 50, the more likely, especially if you see, say, a run up here and then a deceleration candle, you see this was the first deceleration. So it's a smaller spread compared to all of these, generally speaking. And then you see actually several of them. This, not by itself, but also the fact that it ran into the 200 SMA at this level here, and there were other confluence factors as well, but these were signs to short. But look at how far it was versus the rest of the bear market. Most of the bear market was away, but now look here, it was very far below. So this was a sign that it was going to revert back to the median, because that's typically what the price tends to do. It tends to revert back to the median. So here again, big leg down, consolidation, eventually did come back up to the median, didn't come too far above, came back down, and now we've been below all this time. So now we're above. So what is the likelihood at this point? It's been below, came back above. It could push up higher from here. Now, if we just measure, and it's never quite the same day by day, but the maximum distance that we were away from the 50 was about 13. Well, if you count the wicks, about 14.5%. Okay. So if we do that here, then we're looking at, what do you know? It's near the top of this supply zone. Okay, so bring it up as high as you possibly can and then crush it down again. And so this, obviously, anybody that could go back, well, that's 64K. This period here, was I measuring that right? Yes, this was the period I was measuring. So this period, if you'd have shorted here, you could have been holding all the way down to here until it got really far away, as far away from the EMA. Actually, it was further from the EMA here. You notice there's an extreme here. It's almost 41%. And then the first deceleration candle you get, you cover your short. So imagine that as a trading strategy. It gets really far. You let the price just get as far from as possible away from the 50 EMA. Watch for a candle, a deceleration candle, and then immediately go short. You don't need any other sign. And I would be willing to venture that at least 7 times out of 10, it's going to be a profitable trade. Now, don't hold me to this. This is not financial advice, and it's not necessarily something I would do. But again, this is just one of many signs that we're looking for that are going to show us potential reversal. So here it didn't quite make it that high away from the EMA 50, and you can see there was the resistance here as shown by the upper wicks. This is bearish pressure. Okay, so I do think there's more upside, but I think it's limited. So that's all I've got for you today. A lot of talking. If you want to learn more about crypto, check out Smart Money's Crypto Handbook. Go back and read this tweet if you haven't already, because there's a lot of information in there about the course and the books. And I'm basically sharing everything that I can because I love to spread abundance, and that's just my whole philosophy. And I think that spreading abundance and sharing creates a sense of gratitude and appreciation, and it just helps everyone. Helps me, helps you, helps your family, helps my family, and that's just the way that it should be. We need to be in the spirit of cooperation, collaboration, of unification. So have a beautiful rest of your day.